Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on WULF, which is one of the leading small cap gappers today. We can see that MGLD is up around 100%. However, if you go into the chart, you can see there is really no data to kind of give any analysis on. It did IPO yesterday, so it's why we're not really doing any analysis on it, because there's nothing to analyze. WULF, again, it is still a recent IPOing in December time, but it does at least now kind of have enough data to do somewhat analysis on. And so yeah, that's why we're going to stick with this one for today's analysis. And as we can see, we always do start off on a clean daily chart to see where the gap fills are. We tend to use gap fills as price targets, not so much as price entries. But quickly glancing at the chart, there is really no gap fills apart from the one created today at around 643. So then we will then be going into standard deviation charts, so we can start seeing where do we expect this stock to kind of stop pushing up higher, where do we expect the momentum to die, or at least slow down. And for this we will be looking at around the 1125 level and the 1150 area. Reason these two levels, that's because that's the first deviation on both the 4-hour and the daily. So coming into this level, we would at least expect it to be a relatively strong pullback, but if not, could be the end of the move. But if prices do continue through this level, then where are we looking at? We're going to be looking at around $14.50, and that's going to be both the second deviation on the 4-hour and the daily. So again, prices coming into here, expect a hairy pullback or a reversal at this level. And again, if it does continue higher, then $17.15 to around $17.75. Again, there'll be that next level of key resistance. If prices come up to here, again, we expect a heavy pullback, if not, or a reversal or heavy pullback at least at a minimum. And at an extreme, if we break through to the kind of $20 level to /$21 level, this is kind of the extreme we see the stock going to. Wouldn't expect it to kind of break through this level, and if it does break through $21, we wouldn't be looking to touch it at all. The reason being is it's just trading at a very extreme. If we were looking to short it, I imagine shorts would be very expensive, and if there's any even shares available to short, so you can't really short it, and buying at a level such as that would just be so extremely risky, just because it wouldn't make sense, at least from a statistical standpoint, to be buying. That it just doesn't really make sense to be even talking about the stock past that level. So really, $21 would be our final target, but that is obviously the extreme where we are from now. So a more realistic level is going to be the 1125 to 1150. But also things to take into account is going to be this 970 level all the way to around 1020. The reason, or 1010, sorry. The reason for these levels, and we'll go on to a 1-day 1-minute chart, is, and you're starting to see it now, is these are the half deviations. So if the stock can't quite make it to the first deviation, it will tend to have some resistance at the mid deviations, and in this case the kind of 0.5 deviations. So when price is coming into here, this could end up being the kind of top of the day. So right now we're recording 20 minutes before market close. 1025 is its peak. We could see this being kind of the overall top, because that is one of the half deviations. But if it does break through, you're just going to be looking for kind of a breakthrough, come back, test that support, and if it holds that level, then we would expect that push to the 1125. If it can't break above and hold, then we would expect it to just fade gradually. We would expect it to come back down to this kind of fill the gap at 643, but our targets, if you are holding short, would probably be no further than 867, just because that is statistical mean. And again, we don't tend to hold past statistical mean, because that's just increased risk for no reason really. You can go and find another stock to trade where you can look for better returns at lower risks. But that is the breakdown on WULF. So I hope you enjoyed the breakdown. Hope you see the next one, and that's it. Peace. Only takes 4 or 5 seconds, we're about to fold. You're sinking or swimming.